People are fond of two things in particular. Registered investment advisors are sitting on $45 trillion worth of baby boomer wealth, as is well known. That is an enormous sum of money. They are the wealthiest generation that has ever been, and they will all perish. That money is moving to younger people. And younger people adore crypto, much like Charlie Munger did when he died, got convicted, and was sold. As a result, there is a new wealth generation that is completely content with digital assets. They are at ease with them, like them, and consider them to be their asset class. Thus, that is the sole item. The second is that our government is completely incompetent, as if our government is unable to control its spending. Both the liberal and conservative camps argue that Congress is wasting money and failing its constituents, which drives up the price of Bitcoin. Bitcoin follows the same story as gold and silver. That is here to stay. Hold on a second, everyone. We can all agree that the cryptocurrency market is always moving, but with so many newsletters to pick from, how can you find the one that's right for you? Because to its straightforwardness and ease of use, Bitcoin Zella stands out. No matter your level of crypto expertise or familiarity with the industry, we have designed an experience that everybody can enjoy. Guess who's been watching us all along? The man behind the smash hit Rich Dad, Poor Dad, Robert Kiyosaki. Also, we read every comment, and the greatest thing is that it's free. We'd want to thank everyone who has trusted us. You may get all the fresh information for free if you subscribe now. Keep one step ahead of the curve rather than merely following it. Get a head start by subscribing to Bitcoin Zella now. In today's film, we learn that Michael Novogratz, a former partner at Goldman Sachs, established a digital asset financial services behemoth. Here he explains how, with his former colleagues on board, crypto can keep its rebellious essence. The shocking thing is that we are currently talking about how strong crypto is. Not only did we anticipate 5 Fed cuts this year, maybe even 7, but the market did as well. Plus, we have received nothing so yet, and it appears that we will not receive anything until September at the earliest. Assuming we are successful, we will receive one this year. Blockchain technology is soaring. You do realize where it would be now if the Federal Reserve had been decreasing rates? What is causing that to occur? When interest rates remain high, why are equity markets happening? Assuming full employment, the federal government would be spending 6.5% more of GDP if the budget were balanced. Since the day I was born, this administration has operated the most wasteful budget. Then that became the standard. It was normalized by Donald Trump and Joe Biden. Among all presidents in American history, these two have done more to ruin your children's and grandchildren's financial situations than any other president. Even the cryptocurrency market is cognizant of this, with a populist president on the Republican side and a populist president on the Democratic side. Bitcoin is a fantastic long-term investment, and presidents who lean towards populism are less likely to favor budget cuts. Does Joe Biden intend to increase the amount of student loan forgiveness? I had a conversation with a Democratic senator today who serves on the Armed Services Committee. He told me that regardless of the outcome, we must allocate a significant amount of funds to the military over the next decade in order to tackle the challenges posed by Russia and China, as well as the new developments in artificial intelligence in this area. It is unbelievable that military spending has increased. How are we going to raise so much capital? We will continue publishing it until it is exhausted. There will be persistent deficits. That, my friend, is why having Bitcoin should put you to sleep. Also, have some silver and gold. Despite months of flat BTC price activity, fresh study shows that Bitcoin is still mostly profitable. There may be a strict corridor in which Bitcoin trades. All things considered, the majority of hodlers are still seeing a return on investment. Hence, the current behavior of the BTC price can be described as establishing equilibrium. Bitcoin is not capitulating, according to Glassnode, but rather consolidating according to a number of on-chain measures. It would appear that investor weariness and indifference constitute the predominant reaction across all Bitcoin markets when prices move sideways. The Bitcoin price is settling into a previously known trading range according to the report. Even though the cost basis is lower than the current price, investors are still in a generally favorable position because more than 87% of the circulating supply is held in profit. By comparing the market value of Bitcoin with its realized value, researchers have shown that overall the value of a single Bitcoin is still 120% higher than its USD purchasing price. For the past 12 months, MVRV has maintained an average value of 86%, according to a company's remark. The macro uptrend is still intact since the MVRV ratio is over its annual baseline. The aggregate purchase price for Bitcoin's speculative investor base, the so-called short-term holders, is one of the most important milestones that have recently come into focus. According to Look into Bitcoin, the most recent statistics resource, the ST8 cost basis is $64,000. C companies are not gearing up for a massive sell-off at present prices, according to Glassnode, even though they are witnessing unrealized gains diminishing. According to their calculations, short-term holders are currently sending exchanges an average of about $17.40 for TC each hour. But this is still a long way off from the market high of $55 KIB BTC/day, when speculation reached an all-time high. Both the passage or reversal of this accounting rule and the market infrastructure law will have profound effects on the cryptocurrency environment in the United States, I see. So how exactly does the accounting rule work? The two largest custodians in the world, State Street and the Bank of New York, can now begin custodying cryptocurrency. Also, I'm not a fan of the market structure bill because Citibank will start contacting staffing agencies the day after it passes. The lack of clarity around regulations is the main reason why Wall Street as a whole has refrained from participating in the digital marketplaces. Worry that the Federal Reserve will get in touch and tell you no is at the root of the problem. The dread that the SEC will trample them. Like nearly all cryptocurrency companies, they are terrified that they may receive a Wells notice. Once it is out of the way, you can expect a swarm of financial institutions like Goldman Sachs, Morgan Stanley, Citibank, Jefferies, and everyone else to flood into this realm. In a way, I'm hoping it gets pushed back a bit so that guys like us can get stronger, because that's when the true showdown about who will serve the universe that comes in happens. Clients of wealth management firms were the pioneers since they expressed interest in purchasing a portion of the company. Just so you know, firms like Morgan Stanley want the ETF to be in the market for slightly over 3 months before their salespeople may call and suggest that their clients invest 2% of their portfolio in Bitcoin. Keep in mind that people are orange-pilled, not merely bought, when they purchase Bitcoin. I thought Bitcoin was sold? If you're Brad Garlinghouse, you're part of an army that persuaded someone of the value of crypto, whether it was Bitcoin, Ethereum, or Ripple. Wow. That's an intriguing observation. Almost always, isn't it? Because it's a brand new asset? Larry Fink was slapped in the face. The idea of starting a Bitcoin corporation didn't just pop into his head. In an attempt to persuade others of Bitcoin's future significance, 10 or 12 individuals worked together. Hundreds more salespeople at Morgan Stanley and other RIAs across the country are now reading the article on their own and calling their clients to ask, what's the deal with that 2% of your portfolio? We are beginning to have that discussion. This is a discussion that will last a decade, not a few weeks. Staking your E yields you a return. Therefore, a yield is preferable to no yield at all. Many of you likely have some cold, hard cash on hand. If you have any cash on hand, please raise your hand. There is no profit there. That sum would be earning 5% if it were in a bank account. Therefore, choosing to hold something for liquidity purposes is a non-economic decision. Staking Ethereum means temporarily tying up your cryptocurrency. The illiquidity is not without its costs, though. Even though I want to stake my Ethereum, I expect many others to join the ETF primarily for the publicity it will provide. In my opinion, the regulations will be changed to permit staking within 12 to 24 months following the occurrence of the ETFs without staking. In my opinion, this has set a precedent. Solana, the major token ecosystem, has been all the rage recently, hasn't it? Since the FTX estate sold it all, hasn't it? The growth and talk around it are really mind-blowing. As far as I can tell, that will be the one to launch an ETF after that one. Yes, because the procedure is identical. I mean, how exactly can you expand this community? The ETF is attracting new investors who weren't previously interested in Bitcoin.